Hey everybody, welcome back to the channel. Ryan Makes Sense. Today we are looking at a viewer requested company. This is ticker symbol ATEC, Alphatec. I've never seen this before. We're going to learn about it together, so bear with me. Let's go. So ticker symbol ATEC, it is $13.80. If we're on FinViz, we can see that this stock has fallen outside of this channel. We have our purple resistance, blue support. We can see the stock had a hard time breaking this purple, and it has fallen through the bottom of this channel, indicating that it might go lower. If you know me, you know I like to look at the bigger picture. Let's see what's going on. Okay, so the first thing that pops out to my head is it looks like an attempted cup and handle was formed here from 2016 to 2021, with the handle being this 1.5 year downtrend and the test to break failing at the height of the cup. What happened here is looks like a combination of overall market sentiment, but also the company was not able to produce blockbuster results, earnings, income, etc. So it failed to complete the pattern and has now since retracted. It went from 18 down to 9, about a 50% decrease. From 9 back up to 17, and now it's back to 13. Should this stock be trading at $13.80? Let's find out. Looking at the strength, it's at a 52, meaning if bulls wanted to power into this one, they could likely bring this up. The momentum actually looks really confused. It doesn't know if it wants to go up or down at this time. We see the money flow is on the downtrend, and the relative momentum is actually high at the moment. So what we want to see and watch for on the monthly, we can see this middle Bollinger line right here. You can see the stock respects it pretty well. So you can see last month, which was March, the stock closed right above it. We're in April and the stock is currently above it. However, if sentiment turns over, if there's a new development in the company, a press release, this could easily fall through. And what we're seeing here is lower highs. So we had our high here, the drop, a lower high, a drop, question mark, we're not sure. But again, we can also see right here, the lows are also higher. So here's our low, it's at $2 to $3. Here's our other low, which is at 5 to 6. Here's our other low, which is at 8 to 9. So is this our new low, 12 to 13? We're going to find out. All right, so just some high-level observations. This is beautiful. You want to see sales do this exactly. This is not good. You can see that the company is releasing shares into the pool, increasing the supply. Not very good. 2019, there was 61 million shares. 2023, 139. Almost double the amount of shares in about 4 years. The earnings per share, this is not good. It's not rolling around. Some other high-level observations is this company is not profitable. They do have adequate cash. They do have quite a bit of debt, but it looks like they are slowly paying it off. Gross margins are very high. That's really good. You want to see that. Insiders own 31%. Institutions own 66%. We're going to see if institutions and insiders are purchasing. And then we also have our analyst targets here that range from $12, $13 all the way up to $26. We're going to run my calculation. We're going to see what we get exactly. So while my calculator loads, this calculation is based off of when I used to work at a microcap company. We had financial regulators come in and they valued the stock based on every $100 million in sales was equivalent to $1. The market cap over 1 billion also gets included because once you have big money coming in, it's going to raise the price of the stock. So this is my calculation. We have 1.9 billion in market cap. We are losing $186 million, 640,000, correct? But we are making 482,260,000. All right. Now we're going to go down and include cash and debt. So $220 million in cash. That is actually the highest they've had in a long time. That is good for them. It is plus 220,970,000. Total debt is 534 million. So minus 534, 710. 534 million. Yep. Okay. And let's just take a look at this. Total assets 805 million. Total liabilities 700 million. That is dangerously close to having assets dwarf liabilities. Check, just Google what happens when liabilities exceed assets. It comes up with the B word that I don't like to say. But if we look in history, last quarter they had 670 million in assets, 690 in liabilities. That is dangerous. Last quarter dangerous. Quarter before that dangerous. 2022 dangerous. The third quarter of 2022 they were barely. So it looks like this company went through a period of uncertainty. It feels like. Basically the second quarter reported in 2022, they had 511 million in assets, 477 liabilities. And then after that, the third quarter, they had 516 million assets, 515 liabilities. And then basically for almost the whole 2023, they had more liabilities than assets. Not a good thing, but looking at this next quarter, or this trailing 12 months, or the fourth quarter, sorry, they have 100 million more assets than liabilities. So it looks like they've turned the curve there, which is huge. If I would have reviewed this stock last quarter, I would have said no. Okay, looking at insider buying and selling. We do have some buys here. We also have considerable selling here by the C-suite, EVP. So don't really like to see that. We can see the CEO sold, which is generally not good, but you can see that the sells were fixed amounts. So, and it was during 1 month of the year. So I'm thinking every September, maybe the CEO has to sell a portion of the stock. So just something to keep in mind. And you can see the CEO does have options to exercise. So again, he or she could be selling this same amount. So keep that in mind. I don't really see any red flags in terms of selling. I don't see anybody swing trading their own stock. Yeah, so no real concerns over that. Okay, we have our calculation. We included the market cap, income, sales. We added cash, removed debt. So now we're going to take this and we're going to divide it by our 95,060,000. And this gives us a target price of $19.79. If we look at this analyst target here, ours comes in above Needham, but below Wells Fargo, below Roth, above Jefferies, above Morgan Stanley, above Goldman, below Loop, above Needham, and then actually right on target for H.C. Wainwright. So pretty cool. So $19 is okay value. That's trading at $13, so there's about a $6 apex there. What are institutions and hedge funds doing? I'm so glad you just asked because we're going to find out. So FinViz does generally show older data, which means they just don't update it as often as this website we're going to look at. So institutions own 66%. Based off of my calculation, I would think institutions are buying. I don't think they use the same calculation as I do. In fact, I would bet that they don't, but look at this. 76%, so that's a 10% increase, but also look at this. Do you see that? Let me just blow it up for you. Actually, let me take this down and let me blow this up just so everyone can see while I drink some water. Do you see what I see? Okay. So now my other question is, okay, what are Vanguard and BlackRock doing, because they own everything? BlackRock owns 7.6 million. They increased. L5 Healthcare actually decreased a little bit. Gen increased their position. I'm going to say Vanguard owns millions of shares. Let's find out. Okay, just going to do a quick scan. We see several greens. When we see white like this, it means companies are adding or trimming their positions. More greens, one red. Green, green, green. 3 reds, 4 reds, 5, 6, 7, 8 reds. 9, 10, 11 reds. Okay, let's find out what Vanguard is doing. All right, Vanguard owns 5,300,000 shares. Whoa. They will be up on this ownership table soon. So, a lot, I see very bullish data here. This is very indicative, and this is also very indicative. So institutions are up 10% from what is listed here. Let's just take it a step further. I bet I have this one in my catalog. I do. All right, so I charted this one before. All right. I'm going to load some indicators here, and it might slow down my computer for just a second. So let's just hold on for a hot second. My 2019 set is my most everything. It has way too much on the screen. It's going to look overbearing, but there's only one thing I want to see, which I will point out to you. Apologies for this load. I'll probably have to just speed this part up. Okay. So, several things to just quickly describe here. Okay, it's done loading. Okay. So basically what I want to show you here is a couple things. This volume. So basically when we see these bright greens or this bright really, it's really hard for you to see. Let me just zoom in. Okay. So this bright green here is more than the standard deviation of buy orders from the following month. So basically, there was a lot more buying than selling because there's a lot more purchases. So that's bright green. And then when we see this really light red, you can kind of see it here and here. It means that there was a lot more high level selling than average, or more selling than the standard deviation, more than the average. So you could see there was also more buying, but also more aggressive selling. And then we also have right here our MACD. So let me just zoom out. So the MACD here is really important. And then also this slow stochastics, this is when you want to buy, basically. So I would have wanted to buy a bot right here, would have wanted to have bought right here, and you could see I'm referencing here, here, here. So we don't see one being built yet, which means we probably don't want to buy, but I really wanted to come here for the yearly chart. What is the momentum on the yearly? Look at this. That is huge. It looks like we are now to the upside on the yearly. However, we do have resistance at $18. So that $18 lines, what was it? Let's 1888 to 1905, and my calculation is 1976. So there is a good chance ATEC comes and touches this resistance. Will it break it? That is thy question. So let's see what they are saying for guidance, because that is going to give us a good picture of what 2024 is going to look like. Right here. Excuse me. Okay. Total revenue increased by 37%. 2024 revenue forecast. So they're expected to reach 595 million with EBITDA expansion, earnings before income taxes, depreciation, or depreciating assets. 595 is okay. So 595. Okay, so picture this. 2023 was 482. 2024 is going to be 595. That is a $100 million jump, over $110 million jump from 2023. And if we look, they've been doing over 110 million jumps since about 2020. So 2020 to 2021, that was about a $100 million jump. 2022 was a $107 million jump. 2022 to 2023, $132 million jump. 2023 to 2024 is about a $115 million jump. That is really strong. I'm just scanning here to see. They're building a spine monster. That's going to be the name of this video, I guess. The spine monster stock. All right. Story continues. Okay, so about a 23% growth. I don't see anything about profitability. Okay. I don't see anything about profitability, which... Okay, well, they mention it once. Profitable company. Okay. The success we've achieved is a testament. So there's a few different types of traders who consider profitability to be key. But they mention it once here, and they don't say they're trying to achieve profitability. They're just saying profitable. So what we can gather based on this information, and I'm gonna just show you rather than speak. So what I mean is their total cash is 220 million. Total debt is 534 million. They do have assets and cash. And then we also have property, intangible assets. So their cash and assets could make up their debt, the notes they have to pay, any loans. And the way to measure that is through the quick ratio, which is at almost a 2. So if they had to close their doors tomorrow, just whatever, they quit, they have enough cash and assets to be able to satisfy any loans or debts. So That is good, but they are not generating a profit. So there's two things there. Um, if and when they achieve profitability, which uh, they're slowly paying off their debt and they're growing considerably, um, they could become a true spine monster, a profitable spine monster. But at this rate, they are just focusing on growth, and their margins are 52%, meaning for every $100 they spend, they're getting back $152.68. I'll take that every day. I'll cash out everything I have, give it all away to get a plus 52% on top. So this is not a bad company. In terms of charts, if I had to enter this stock today, I mean, $8 was our low back in August of last year. Let's see. All right. Yep. So a few things here that I'm noticing that we're not really going to see on that Finviz chart. We do have several. We're on the bearish Ichimoku cloud. So if the stock does break through this $14 mark, there's going to be quite a bit of resistance at $15, which again, for a quick trade, that's beautiful. Great. This was insane volume here. This was 1.1 million shares. No, I lied. This was 5.9 million shares on one day. We can see this resistance here. So I would wait until the stock gets over the 200 SMA, which is at 1425 right here. So once the stock is over the 200 SMA, I would consider this tradable until we get to a clear resistance area. So we're going to watch this next week. I mean, I'm not the kind of person to just trade in and out. I would rather dollar cost average over the long term. Is this a good range to slowly dollar cost average? I think so. Again, we were at this was $9 back in October, November. I said August earlier, don't listen to me. So again, I think this company has a lot going for it. They're going to make more money in 2024. And that's all I've got. I think this is a good one to own long term. Just doing some more charting. If you are a box charter, Darvis box, you can see it's been trading in this box for, gosh, at least 3 years. If we go back even further, you can see it's been a lot longer than that. So let's just do it. Maybe. Like right there. Yeah. So again, you can see, look at this one candle right here confirms the size of the box. Literally. Comes up, tries to break it. You can see the bottom of the box acts as resistance. It comes in, it just spearheads in all the way up through, back down, up, almost all the way down, comes back, tests it, rejected. So again, if you're a Darvis box person, you're going to be patient. If you're a long-term investor like myself, you're not going to break the bank adding $20 every other week or once a month for the next year to see how that goes. Anyway, I digress. This company seems totally doable, and I think this could do very well in the long term. By 2029, this should make over $1 billion in sales a year, based off of this $100 million jump every freaking year. So that's all I've got. There's no true right or wrong here. There's really good support at the $6 mark, a lot of resistance at the $16, $17 mark. My target was $19. $19 up here. It's now $13. $6 is the baseline. Great support. I'll let you make the decision here. If you've made this far, consider subscribing. Have a great day. Bye.